The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we had a mixed day in the grains and oilseeds on Thursday to close out the month of July. Some pressure in bean oil. That probably led to some minor losses in soybeans. Corn was up a little bit, and a really ugly close in the cattle complex. Could some of this be tied to the ongoing uncertainty with tariffs and trade? Is it weather? What are we tracking? Let's talk about things. Joining us now, Brian Doherty, Senior Market Advisor with Total Farm Marketing. Brian, good to talk with you again this week. And you and I were kind of talking off air. Interesting trading day across the board. You got cattle lower, bean oil lower. Those are two markets that haven't done that in a while, and corn up 1 to 2. Hard to make a sense of some of the trade moves on Thursday, Brian.
Yeah, it's some language we're not used to using lately. Corn up, bean oil down, cattle down. Wow, whoever imagined that. But that's been the trend, right? So you've had strength in bean oil, strength in cattle, good demand-driven markets, or tight supply, or both. But you're starting to see some cracks in that cattle market. Even though it raced in the new highs yesterday, you've seen the cutout values drop pretty significantly the last, I'm going to say, month, with Choice and Select, each down about $30 off their peaks. We've continued to see strong cash market. And if I read the numbers right, beef consumption is actually up on the year about 4%, but slaughter down about 6. So kind of take your pick which way you want to be. The cattle market's had a really strong run. Corn may have found a little support from a break in the feeder market. Maybe they've said we want to buy, hedge some corn for buy feeders because feeders are off. That might be a bit of a stretch. But let's circle back to corn. Corn's kind of an enigma right now. December corn closing at 413 3/4, so about 414. Jesse, I've mentioned this on the show before that through July now, 12 of the last 13 months, December corn futures for 2025 have traded at 440, give or take. The only month that didn't was February. It stayed above 440. And so when you look at let's call it 414 for simplicity. 414, well, that's only 26 cents off of 440 with huge acres, highly rated crop, a better rated crop than the smaller acres from last year. What gives? Well, good demand for sure. And the crop's not in the bin. But I guess I'm a little bit concerned. It's like I use this analogy, and it's probably not a very good one. It was like a kind of a heavy rock in a cardboard box, but cardboard's getting wet. Just a matter of time before it sags and falls in. I wonder if the corn market is in that. Maybe the beans gave us a better perceptive sign of that this week, losing close to 40, 50 cents.
And I'm glad you brought that up. I was going to ask you some of this relationship. I know some folks like to look at that December corn, November bean spread, for instance. And I mean, you got Nov beans, $9.89 essentially at the close on Thursday compared to that 414, we'll call it, December corn mark. Worries that December corn can get below $4 like the September contract did this week. I mean, it's an interesting thing when you look at some of this spread action and these charts and more, but I know these psychological levels of 4 and 10 are pretty key levels, Brian.
They are. And in big crop years like this one's projected to be for corn, it is not unusual to see the low come in sometimes in August or September. So perceptively, I call it the perceptive low. It's not harvested yet, but the perception there's just a lot of it. So the bears are going to sit here and look at this and go, gosh, there's more to go. We've got corn to clean out of bins. You've got a good looking crop. You've got the dollar rising a little bit here. You've got highly rated crop. Good looking, highly rated, I guess, are the same. But there's not a catalyst to tell end users that, boy, they better get in and buy today. They like the price, but I don't think there's any signal to rush. And that the big signal would be last year, the lesson sort of learned was just when it got hot and dry in August, it did have impact to yield. Final corn yield was nearly 5 bushels less than the October estimate, and beans are about 2 bushels less. I just don't have a forecast, at least deep through the first week of August, if not further, that indicates a hot, dry pattern. And in fact, the longer range forecasts, the 30-day forecasts, are pretty much looking at normal for rain and temperature.
I wonder too. I'll pivot a little bit here to talk trade and tariffs with you, and I can rope in export sales as well. I think with this part of the conversation, we saw a lot of export sales announced on the Daily Wire Thursday morning. Weekly sales numbers, of course, came out. We're getting this flurry of trade deal announcements or talk of putting tariffs on certain countries. When we got announcements of South Korea, Thailand, Cambodia, etc. There's talk that we could be getting closer to a deal with China. But then on the flip side, a 25% tariff on India, potentially a 50% tariff on Brazil. Wonder if that maybe spooked some cattle traders on Thursday. I mean, it's interesting to look at all of this in a vacuum, but I have to wonder if the trade is really concerning itself with all of this tariff and trade deal activity, Brian.
The honest answer, I don't know.
Yeah.
I don't know if this, when like you said, the announced export sales today. Well, stuff's pretty cheap, right? It's good value. So to see whether countries worried about tariffs or not, and not to be coy, but what's 10% on $4 corn? It's 40 cents. Is that going to make or break an export transaction? Not in the big picture, right? It may be negotiation tools in the short term. You bring up Brazil, and that's getting interesting. I don't know how to kind of get my hands around Brazil or corral Brazil. Their internal usage for corn is up. Um, Tariffs on exports to beef. Well, I don't know if that's a bad thing or good thing. I mean, we're tight on supply now. Sometimes I do wonder when politicians make statements or say certain things. They can be very busy people, and they're saying things without really thinking through. I'm just thinking about when President Trump talked about selling beef to Australia or
Mm-hmm.
beef. Well, I kind of wonder someone should have tapped him on the shoulder and whispered, "Mr. President, our beef's at record high prices here. We probably
Mm-hmm.
don't want to sell beef overseas necessarily." But the market's correcting itself. Have you looked at beef sales today? I think they were 30% below the 4-week average and well underneath last week's number. So you're starting to see that tail off where pork exports are pretty strong. So the market's responding to price. So we've got a lot of interesting dynamic things that are happening daily. Wheels are turning. It's exciting and frustrating all at the same time. I think the end game, though, for the grains is that you've got a good forecast. End users are buying, but we're not likely to see. And I do like the new crop sales on corn, but we're not likely to see just this massive sweep in and buy every bushel you can buy. There's just no signal to it. It costs money to buy stuff and hold it and store it. So I think the unfortunately the end user is going to say, well, farmers got storage. They can pay to store their own corn. We'll buy it from them later because we don't have to rush in there and buy it today. Not the way
And
the crop looks.
yeah, and that brings up a good thought for me. I'll ask you from just a risk management standpoint. I've heard a lot of producers who've kind of been taking the tact here that their risk management plan this fall is going to be store it and wait. At
Right.
least, whatever they can. And then the bushels that have to go to town, okay. I mean, from a risk management standpoint, is that one of our only options, one of our best options? I mean, what do you think about that on the grain side, Brian?
With marketing, the only best option is with hindsight, right? So a lot of times people ask, what's the
Yeah.
best I can? Well, best is relative to risk tolerance, to cash flow needs, to getting crop off the field. So it's a little bit more layered and complicated at times. Um, Rather than just either the market's going down or up. And then you and I have talked about this before. If the market goes down, that's one thing. So everybody will ask, well, where's the market going to, how low can it go? Well, here's where if I take my best stab, here's where I think it can go. But again, the good question is, well, will it stay there, or is it going to come right back? So the point of it is that when you look at other analogous years where the market fell apart, it came back, right? It came back in late fall and in December. Analogous years as in highly rated crops and big early lows in the market. Um, but for the moment, The funds are short. I think they're likely to stay as short or get more short corn and beans for the moment. Now, if there's a theme, if we want to talk a theme, as I talk to farmers, I'm kind of hearing our corn looks really good. It just does. We could have record yields. Our beans not so good. But when you ask farmers, what do you want to do for marketing right now? The responses, and this circles back to where you started this question or this conversation, is I probably talked to 3, 4, 5 pretty big farmers this week, and they're kind of their ideas not to do anything right now. They just don't want to do it. Don't want to sell here. They're wore out. They're tired of the markets. They're tired of low prices, and they'll just try and wait it out. Now that's the talk. The reality is, and I think it's as important now as ever, is to really look at every tool, everything you can work in your favor. I'm worried basis is going to widen out as we get into the harvest. So think about basis contracts, especially in corn, you're going to deliver, right? I wouldn't put a basis contract in for something 6 months out, but harvest delivery, if you can get a basis or something that looks halfway attractive or shortly after harvest, think about that. Carry in the market. There's 50 cents a carry from September to July. It's 50 cents that could evaporate if the big crop allows the market to go flat. So how do you manage that? So now is the time for me, not to kind of turn your back to it, even though that may be the comfortable thing to do. Now is probably the time to really say, do I need to be prepared for anything different? Do I need to leverage myself differently? If the answer is no, then let it sit. But if the answer is yes, then have those critical conversations.
Brian Doherty, Senior Market Advisor with Total Farm Marketing, is our guest analyst here today. So we talk livestock too a little bit more. I want to circle back to thinking about the Brazil piece here and the potential tariff there. And, it's an interesting dichotomy because I think a lot of producers, some of the chatter I heard on Thursday, of course, they'd love to see U.S. beef marketed more. I mean, that's been the talk for so many years. But to a point you made, we're at low inventories and high beef prices. So we're bringing in supplies from other countries like a Brazil or an Australia, et cetera, et cetera. So one has to wonder if a 50% tariff goes on Brazilian beef, for instance, could that somewhat immediately spike beef prices at the grocery store? And could we finally get some of that consumer pushback that we've been waiting to possibly see? It just made me think about that. It's an interesting thing to dissect, I think, Brian.
Well, it is. And if you look at the cattle market just of itself, so you talk about tariffs on Brazilian product, we still have screwworm issues. And where does that filter out? And then we just got high prices. So okay, great. Be careful what you wish for. You got high prices, but if you're putting feeders back into the yard or you're buying these high price feeders, boy, have your pencil really, really sharp. I want to draw attention to or remind that the feeder market, the limit on feeders alone is 9.25 cents, $9.25. Things can move fast. So what I'm doing is painting the picture of all these variables you try and get a handle on, and I don't know if you can get a handle on any of them with any confidence. So trust your tools to help you out. Trust your conversations with your advisor. Supplies, I don't see any quick fix out of this. We've been talking about that for actually about 5 years now, that when you contract a herd, if demand does 1, 2, 3 things: goes up, goes down, or goes sideways. Sideways down, we probably okay. Consumers can, but when demand seems to pour in, this is where it gets interesting. But as I said, there's some cracks in the lining. Now the export market's slowing, cutout values have dropped, cash prices have moved higher, so you can see the pinches coming to the packer between the cutout values dropping and having to pay more for cash. And then seasonally, I don't know if I like that word. That's a word I can use from compliance. And let's say time of year. is typically the market's down more than it's up over the next month in live cattle. If you go back the last 15 years, typically it's down more than up. So lots and lots of dynamic parts. I guess what I'm trying to get at here is trust your instinct to use strategy. There's too many things to outguess here. It's a wild environment right now.
Well, of course, we always remember that risk of trading futures and options can be substantial. How about the dairy complex as we close out the month of July, Brian? Any thoughts there?
Yeah, a lot of volatility, confirmation of bigger supply. So let's recap the month. Bigger supplies. I gotta think that we're going to get some bounce here. You and I talked a little bit off air about the weather, or on air. I don't know, but we talked weather. But
Yeah.
it's been a humid, kind of hot, and we've had some heat. Now, each time we kind of get to these points where it seems like this could be prolonged in I'm going to call it the dairy, world, then it seems to weather takes a change. So in Wisconsin today, for example, we're probably in the mid 70s, but we were in those 90s, right? 90s humidity, and you see the milk production really, I'm going to say, impacted by that. So with that being said, big picture perspective, what I want to look at here is a market that probably has some bounce, but I don't think it has a change in trend right now. The production numbers are too big. It all kind of goes back cheap feed and to beef. You've got really good value for those cows. But if you want to hold them back, you may even have better value in the calf and then get rid of the cow. So I think the production numbers and the cow numbers show us that herd is opposite of the cattle. That herd is expanding, and not dramatically, but it's expanding. So that's where things sit.
Any other final thoughts for us on the show today, Brian?
Just my general thought is that stay as a business person, and you are wearing that hat as a farmer, stay vigilant, look for opportunities, ideas, keep your conversations, I'd say, focused and narrow to those who can listen and provide solutions, and not just listen and agree with you to complain, because it's easy to get down to funk, and as we call it, the coffee shop talk. Stay at it, stay vigilant. Many of you are not happy with the price, but you'll be very happy with your crops. So, there's a trade-off and a blessing there.
Brian, if folks want to reach out and talk with you at Total Farm Marketing, what's the best way to reach you?
Best way is 800-334-9779.
And you can also find him online at totalfarmmarketing.com. Brian Doherty, Senior Market Advisor at Total Farm Marketing. Thanks for joining us on the show. Always good to hear from you. Have a great weekend, Brian.
Yes, sir. Much appreciated. Thank you very much.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.